Costin. We're on. Welcome, everybody. 9th of March, Vielle Google Hangout. And today, let's see who's on. Let's see who's with us today. Okay, so there is Dale Henry. Is Neil Singer, of course. There is Dale Henry.
Hi, everyone.
We have Graham Waddell, our Scottish man.
Afternoon. Good afternoon.
We have Duncan Costin, who is the property director of Pure Gym.
Hi.
And we have Humphrey Cobbold, who's the CEO of Pure Gym.
Hi, everybody.
Okay, so today, remember, CPD accredited Google Hangout. All you have to do is to send us an email or give us a call that you've watched the CPD Hangout or you've listened to the podcast, and you will get a CPD certificate from Vielle. So remember, if you haven't done it already, you should sign up on YouTube so you can get automatic notifications. And also remember, last Hangout was the first time we had some podcasts available. So from now on, you could listen to us on your podcast. So the next time you are cycling in Pure Gym or on the running machine or rowing, you just have to turn on Vielle's podcast and you can listen to see what's going on in the world. Remember also that next week is MIPIM and we will be at MIPIM. So if anybody wants to meet any of the team in MIPIM, give us a shout. I'll have to have a chat with you. Okay, so that's the intros over. Let's talk about the market and news. Well, Dale, should we just tell everybody what's been going on, what's for sale, and what might be coming up at Vielle?
Sure. Yep. Happy to give a quick rundown of the properties we've got currently available, which are the first of which is we've got a retail investment in Rugby Town Centre, Letton Holland and Barrett. They've been in occupation since 1999, and they've got a further 3 years remaining on their lease, albeit they removed a break option in 2016, showing their commitment to this building. We're asking £475,000, which is 6%. The next sale we've got, we're offering a petrol station investment in Wallingford in Oxfordshire, fronting the busy A329, which is let for a further 10 years with a guaranteed rental increase in 2023. We're asking 1.15 million, which is a net initial yield of 8.5%, rising to a guaranteed 9.34%. The next investment we have is a retail investment in Torquay Town Centre, which is let to William Hill, so highly secure income. They took a new lease from June 2016 at a rebased rent, and we're asking 265,000, which is a high 10% net initial yield. Next, we have a Co-op supermarket down in Ivybridge in Devon, let for a further 10.5 years. It's the only supermarket in the town. The tenants spend about £1 million refurbishing the unit, and we're asking 2.73 million, which is 6.5%. In Newport, Wales, we have a Clinton's card retail investment in a prime retailing pitch. The property is let on a new lease from February 2015 at a rebased rent, and we're asking £245,000. Again, high yield of 12%. And finally, in Scunthorpe, we've got a retail warehouse let to Go Outdoors with 10 years unexpired at a low rent of sub £5 a foot. And we're asking £2.385 million, which is 6.5%. We are working on some further sales, which we'll be bringing to the market over the next couple of weeks or so. So just to very briefly give you an idea of what we've got coming up, we're going to have a retail and a mixed-use retail and residential investment in Fareham Town Centre, which has some residential conversion redevelopment potential. That'll be an attractive £500,000 lot size. We'll have an interesting investment in Plymouth City Centre with about 70% of the income secured to a AAA covenant for a further 40 years. That'll be about 7%. And we are working on some multi-let ground lease industrial ground rent investments up in the northwest as well.
Good. Thank you, Dale. Graham, what's going on in Scotland?
Well, hopefully, I don't know if you've got a question for this week, Neil, but obviously the question a couple of weeks ago was who's going to win between Scotland and England, and I think we all know the answer to that now.
What? What's that? What
So,
running?
just make sure everybody get the answer to that. It's 25-13.
Is there a game? Is there some game tomorrow? I really, honestly, I don't know. Is there a game tomorrow?
I know. I'll keep you posted, Neil. I'll keep you advised.
What's happening tomorrow? Honestly, is it
tomorrow? We're going to beat the Irish.
Race? The boat race? What is it?
Tomorrow we're going to beat the Irish.
Okay. All right.
But in terms of sales, we've been pretty busy. We have a card factory in Elgin, which I'm hoping is going to conclude today. So that will be sold within 4 weeks of bringing to the market. We are still working on our McCalls in Dundee. To be fair, there was a slight issue with the strength of covenant there, but we've managed to approach McCalls and get an assignation to the main McCalls covenant. So we'll be bringing that back out next week, £500,000, net initial yield of 8%. New sales, Superdrug in High Street Air, substantial Grade B listed former bank building, specifically adapted for Superdrug when they went in 2016. 2006. The lease is till May 2021, so just over 3 years, and we're bringing that out at 1.675 million, which is a very attractive net yield of 11%. There's a couple of upper floors which are sold with the building, which are vacant at the moment, which could be converted to residential. The other one, which we've just put on the website today, is Sally Beauty in South Street in Perth.
So what did you say? What was that?
Sally Beauty. She's a beauty. Yeah.
Oh, Sally Beauty. Sally Beauty.
Sally Beauty. Okay. Yeah.
Sally Beauty.
So new 10-year lease, unbroken, no breaks, from November 17, and that's 530,000, a net initial yield of 7.13%. And much like Dale, we'll have a couple of other sales that we're working on that we'll be bringing out next week. Another well-let retail over 1.7 million, and a smaller retail of 350,000, a new 10-year lease. So plenty happening.
Wow.
Plenty happening up here. Good.
Excellent. So if you want to buy properties, you know where to come. singleviallesales.com. Don't delay. So, guys, let's talk about some things in the news. I've got 3 things I wanted to talk about, and anybody can jump in, and you're more than welcome. Please do give us your views. So the big news, I think, in the last week is how many retailers have found it a little bit difficult. And I'm interested to hear what Humphrey and Duncan think. I mean, we've had Toys R Us, which my guess is really they just lost the model. It wasn't a question of online. They just lost the model. New Look, which has gone into a CVA. What else is there? There's Maplin. What a disaster, Maplin. Every middle-aged man loves going into Maplin to buy his gadgets, and what have they gone into admin, haven't they? And what's the fourth one I forgot? Prezzo. Yeah, so it's not been a great week for the retail sector, and how that impacts upon the property market, we'll have to wait and see. When this happened a few years ago, really, actually, people still jumped into property because they wanted yield, but obviously they're a bit more concerned about the covenant, and I suspect that's going to be the same thing now. But there's not a lot of choice out there. If you want to buy properties and get your yield, I suppose you want to spread your risk. So I think that's a bit of a concern for the market. The second thing I wanted to mention was that Countrywide, which we have followed on the Hangouts quite closely over the last year or so. Alison Platt, of course, left recently. She's the MD, and the chairman, Peter Long, is now running the business. And it was announced, I think just yesterday, that their profits are down 45%. And their overall income was reduced. Sorry, their sales and letting profits were down 45%. Their overall income was down by 9% during 2017. And they are apparently now going to drop their hybrid online offering, and they're going to go back to basics. So because I don't know, guys, Duncan, Humphrey, what they did is they were trying to emulate the online model, and apparently you could go into one of their brands and you could say, well, I'll either do the £500 or £1,000 online offering, and if I can't sell it, I can then pay you a proper fee at 1% or 2%. And they seem to have dropped the online offering and gone back to basics. So I have 2 comments on that, and please, anyone else, please jump in. My comment is, number one, I've changed my mind about online agencies. I thought that online agencies would actually be the way forward. And I did think that high street estate agencies were likely to close. I don't think that's the case anymore. I think it's all about service. And I think all that's happened is that if an online agency such as Purple Bricks, which hasn't had the best news and press in the last few weeks, if they can't offer a decent service, people won't use them. It's all about the service, the quality of service. The other thing I think they've done is they've created a race to the bottom in terms of fees. And that's put pressure on the high street agents. I think what's probably going to happen is the high street agents will carry on, and they should charge a proper fee for doing a proper job. But I think they will close a lot of branches, or they will relocate to cheaper space. Why do you need to have a front door on the high street? Maybe they'll move upstairs into offices. And if they all move off the high street, you think of someone like, I don't know, Hampstead, which has got 15 or 18 estate agents. There's going to be 18 empty shops. So either the rents have got to tumble, or someone else has got to go into those shops. So actually, I think that the estate agency in the high street is not going to close and is not going to go online, but is just going to adapt, and they've got to bring down their cost base. In fact, Foxtons, which is renowned in London for taking very prominent, expensive units, basically they're advertising hoardings with a window. And that must be one of the reasons, I would guess, why they've had problems recently. I don't know if anyone's got any. That's my view.
I think it's hard to argue with that, Neil. There's got to be change in that sector, I would have thought. But coming back to your first theme, the theme of retailers struggling, and Duncan should comment on this. We're seeing a steady stream of opportunities from retailers who are struggling to one degree or other. Some of them have gone through the sort of formal process of administration or CVA. Others just have too much space in places. I think, and again, Duncan should comment. I think there is a need for more realism about what the excess of space is going to mean for rents at times, but and a recognition of what leisure operators like ourselves can really bring to developments. And when we find ourselves on retail parks, we know that we can bring 6, 7, 8 of an attractive demographic to retail parks that can help strengthen retail parks and recover some of the losses that other retailers are seeing. And so we are seeing some of that start to cycle through. It really does take quite a long time. And the good example is some of the BHS sites are now only just getting fitted out. I think we've got 1 or 2 that are going on 2 years after business.
You've taken some of their units.
Yeah,
space within their units. Yeah, not the whole thing.
Yeah, so we're taking space, but it's taken 2 years to work through the system. It takes a long time for this space to be repurposed.
I think we've seen these sort of boom and bust cycles in the property market many times. Those of us that have been around long enough, and there always seems to have been a sector that's been there to take the space. The last time around in 2007-8, it was the discounters, it was the B&M bargains and home bargains, Poundlands, Poundworlds, 99p stores of this world. But I think they've hit saturation point almost now, and I don't really see that there is a whole sector that's there to take all this excess space. The leisure sector, and in particular, well, a lot of parts of the leisure sector are really struggling, as we've seen with Prezzo, and it's been well publicised that a lot of the restaurant businesses are struggling, and I think it's probably more the likes of gyms and to a lesser extent trampolining companies and this kind of thing that it's that element of the leisure sector that is still holding strong and is there to take the space. But I don't quite know what's going to happen to all the smaller units, all these new looks and things that are going to hit the market, because I just can't see who's there to take them.
Yeah, well, we've been selling some investments where we had new look. We've had 2 actually, and we were giving them away, and no one wanted them. Yeah. I mean, they were pretty secondary locations, actually, to be fair, but nobody wanted them. So that market, it really is. You do wonder what's going to happen, actually. What we've heard, interestingly, I've only heard this in the last few weeks, is that some of the department stores in London, they're giving up space to people like WeWorks now.
Yeah.
So that's really interesting, actually.
We've got some discussions going on with department store operators. One that's particularly productive, where yes, there's space in what you would regard as relatively prime London space, where they are willing to release, sort of 10, 15,000 square feet chunks, I think, to us, Duncan. It's that sort of
absolutely,
really
big chunks of space.
Chunks of space.
Really
when you look at our sector in aggregate, if you look forward over the next 6 or 7 years, our projections are that the value fitness space in total is going to open probably 5 to 6 million square feet of space. Take it in aggregate, we'll do between 40% of that, so for 2.5 million of that, maybe a bit more, maybe a bit less, but real volumes, and that will come, relatively little of that will come from new builds. Quite a lot will be units being carved up, some standalone units. And one of the advantages we have is we can be very flexible in the space we take. We've got converted bowling alleys, nightclubs, theatres, car showrooms, offices, retail units, basements underground in London, top floors of office blocks in Bristol. A pretty broad range that leisure operators like us can take, which I think is really helpful. We hope the kind of landlord community into the property industry, and that's a message we're trying to get across to people more in a market like this.
Can I ask you, because there's hopefully people will be watching this now or later, and they may actually have some space for you, and we're here to help. What sort of space do you guys after? Is there a size? Is there a size requirement, or?
Duncan, do you want to headline the sort of key elements?
Sure. Yeah. I mean, we can really take anything from around 5,000 square feet up to about 18, even 20,000 square feet in certain key busy locations, and we have a range of operating models to suit the various sized units. That needs to be over 1 or 2 floors, and we need a lift and stair core link between the two if there are 2 floors. Outside of London, very much a requirement for parking on the larger units. So if we're at sort of 10,000 square feet plus, we definitely want parking outside of London. Inside the M25, we can live without parking because clearly the majority of people travel by public transport. We're taking 15-year leases with a tenant-only break at year 10 outside of London. Inside London, we can be a little bit more flexible on lease term. Even potentially going to 20-year leases unbroken for certain key locations. I guess the key issues for any gym user, not just pure gym, are there's always a consideration for acoustics, both in terms of noise emission from the building itself to neighbours, which may well be retail or leisure or residential. And the other key element is floor loading capacity, which we need 5 kilonewtons per square metre floor loading, which on certain older buildings can sometimes be a challenge. Have
you had any? Here's a thought, something quite interesting. Have you had any occupiers come to you and say we've got excess space? I don't mean retailers, actual
yeah, lots.
Because you could see now it's sort of.
We talk to occupiers all the time, and not just in the retail sector.
That's what I mean. Office occupiers.
Office sector. Yeah, there's lots and lots of opportunities where people have landed with too much space now. Their operating models have changed. Their storage requirements have changed, both in terms of filing from an office perspective, which is now done in clouds or off-site, or from a retail perspective, storage is almost all but obsolete now. People go from warehouse to shelf, and there's a lot of excess space in shopping centres, upper floors, which used to be given over to storage for the retail units in there. There's and a lot of storage space in offices, so it's a lot. You must
at the moment, in all seriousness, you said that when we were talking earlier, you said there's a few competitors out there.
Yeah.
There must be so many opportunities for you guys.
There are, yeah, absolutely.
You wonder why you have to pay any rent.
Yeah, we do wonder that, actually. Yeah.
No, I'm serious. No, I'm not joking. There must be empty buildings around which just at the moment don't have any tenant demand for.
There are. I mean, look, the property market is always hard work, whatever the climate. You know, you always end up in a bidding war. So whilst there may not be other types of occupier for a building, you know, often if we find a building, or the gym group find a building, or JD Sports find a building, then the landlord will do the rounds and get us involved bidding against each other, in much the same way as they used to do with the discounters in the last recession. Yeah, I mean, there's a lot of occupiers out there with a lot of excess space, but they've got rents that they're having to pay, and they want to try and match those. They want to try and match those rents on the downsized space.
Yeah.
And often the costs of splitting units can be quite high for them, again, because of the acoustics and things. So it's not easy, but
it's an interesting sector.
Yeah,
you know,
there's plenty being presented to us.
But what happens in the investment market often is that there's all of a sudden one sector suddenly becomes in vogue. You know, it was nurseries, or it's student accommodation, which you sort of can't help feeling is really overblown. And now there's a lot of people interested in gym operations, and you can suddenly see that really growing. Can I ask you, because actually I had another point generally, but can I just ask you, how do you guys intend to expand then? Are you going to expand overseas?
Well, the focus expansion is in the UK. You know, at the moment, certainly, and we think the UK market is about half developed, speaking, maybe a little over half for the value gym sector, which obviously we lead in the market overall now. So, you know, we've still got lots more sites in the UK. We've been opening 20 to 30 what we call large boxes a year. We'd hope to continue about that sort of rate for the foreseeable future, and probably maybe 10 to 25 what we call smaller or mid-sized boxes a year. That sort of number is what we're working to, and there's plenty to keep Duncan and his team busy in that. We've got a good model and a good business, and yes, we're looking at some overseas opportunities, but still very early days for that. So we're doing the sort of pre-screening work on markets overseas and stuff, but that's, you know, it's not more than 5 or 10% of focus, and it's pretty much only me and 2 others doing that.
I've always wondered. I've never actually acted for an occupier. How do you work out what rent is right for you? Because obviously the lower the less is the best. But if you're competing, do you sort of look at the demographics of the location, the sort of the likely number of visitors and?
Yeah, we have quite a good demographic modelling system that enables us to, based on competition, socio-economic factors, traffic flow, enables us to predict reasonably accurately now how many members that we're going to get, and the socio-economic factors enable us to predict fairly accurately the sort of membership yield that we're going to be able to charge. So. I mean, our rents are very much driven by our financial appraisals. We don't get involved in bidding wars if the model doesn't work for us. We'll quite happily make a tactical withdrawal and say, take it. I mean, ultimately, this is what is getting these retailers into trouble a lot of the time. There's a fear of them not getting the best properties. They massively overpay. They end up with rent rolls that they can't support when sales fall away. And the next thing, they're in administration, and it's not a mistake that Pure Gym will make.
Yeah, I see. I've heard that there's another way that Humphrey makes sure he gets his make sure he gets the units that he wants.
You know, too much inside knowledge there. You know, that's the trouble.
You
got to stay sharp. You got to stay sharp.
You got to use the tools that are available to you, Humphrey. Okay, so Dale, you had a question for the guys, didn't you?
Yeah, I had a question for which either one of you feel free to answer. As you know, we're very much a tech-driven business, and you know, gyms and fitness clubs to me are no longer these days sort of just bricks and mortar. Technology seems to play a massive part in a member's experience, and I imagine quite often determines whether a member, you know, someone decides to join one club over another. They look at the technology in that gym, and you know, have they got the latest machines? And so, you know, in the property industry, you know, it's all about prop tech. That's the buzzword at the moment. in terms of the gym industry, I know there's sort of constantly emerging innovations. You know, I see whether it's, you know, wearable technology or you know, in my gym they have virtual classes. So my question is, are you constantly having to look at the sort of technology side of the business to stay sort of one step ahead? And are there any sort of new innovations sort of on the horizon which we should be looking out for?
Sure, so let me pick that up. So there are two distinct elements to technology in our business. One is the wearable tech, in-gym tech, equipment and virtual fitness, as you've alluded to there, Dale. And the other is how people, you know, join and interface with the gym and actually manage their membership, if you like. So there's two very distinct parts. We've invested a lot in the latter and a bit less in the former. So let me deal with the latter first and tell you why it's so important. Everybody can join our gym and manage their membership entirely through their mobile phone or through the website. We don't have any gym, any commission salespeople or anything like that. Really important because it completely alters the cost structure of our business. And that is the radical change we made in the business. So let me give you an example.
Oh, we're losing you, Jim. We're losing you a bit.
Are you losing me a bit?
Okay, now go on, try again. Say that again.
Let me try again. So is that okay?
Yeah. We just lost.
Okay.
You just lost you slightly.
So when Fitness First had 190 gyms like us, they had over 1,000 commission-based salespeople in their business. We have 0 commission-based salespeople in our business. All that work is done by our technology, where people join and leave and manage their own membership.
Yeah, it's
so that's how important that is. If you think about the difference in cost structure that results from that, it's fundamental.
Yeah, I mean, we see the same sort of thing. I mean, we have a view about that in the property game, really. It is changing. It's just dramatic the way these things are changing things.
So, to give you an example, our gyms operate at a large kind of got a capital invested is well north of 5%. Old style Fitness First struggle to get much above 10 or 12%.
Sorry, say that again. We lost you there for the connection. What was that last thing?
We get a margin of over 30% in good gyms.
Okay.
So we have to pay for our capital, whereas Fitness First struggled to get beyond about 12%. So,
okay.
So that drives returns for us. And then the fitness tech that Dale referred to, yeah, we're doing virtual fitness with digital fitness. We've got classes and studios that are pure virtual. I heard today, if you want to see an interesting gym, go to the Oval Gym.
What does that mean? You put a headset on and do a side class?
No, you have screen. You have a big 16-foot, 12, 16-foot video screen.
Yeah, they have it in my gym.
That comes up on screen.
Oh, wow.
Yes, I mean, it's awesome. It's awesome. And I heard this week that in our Oval Gym, where we have both class-based studios and a virtual studio, the number of people doing the digital virtual studios is now higher for doing instructor-led classes. Now, people our age feel it a little bit weird working out to a screen. But the generation that's following us, they live their whole life through the screen, so it's completely normal. And they seem to be enjoying that a great deal. So we're seeing some of that innovation happen as we speak.
Okay, well, Graham's always in the gym, aren't you, Graham? So Graham's got a question.
Yeah,
you can't often get hold of him during the.
You can see, that's why it's a headshot, Neil. I don't see the rest of me. What's the kind of percentage do you think that uses it at 3 o'clock in the morning and 4 o'clock in the morning? And does that not give you challenges if you're going into a multi-occupied building? I mean, the 24-hour thing does intrigue me a wee bit.
Yep. So about 20% of our visits to our gyms outside the hours when a normal gym is open, i.e., between about 30 in the evening and let's say about 6 o'clock, 6:30 in the morning or 7 o'clock in the morning when normal gyms used to. And it's not that everybody goes at 3 o'clock in the morning. It's very small numbers then. A lot of people between about 9 in the evening and about midnight and between about 4 a.m. and 6 a.m. So, for example, I was in a gym in the centre of Manchester at 5 to 5 in the morning a few months ago, and there were 60 people working out then. And it's those shoulder hours that are particularly valuable to people. We monitor through CCTV, and we typically always have a member of staff first aid trained on site at any time, including service and cleaners overnight. So that adds about 15 or 20% to the usage of our gym of what a normal operator would be able to provide, and is valuable. And about 90% of our gym have 24-hour access.
A lot of people struggling to sleep, obviously.
Yeah, well, or working shifts, or working for the NHS, or that sort of thing. Cabbies who come off roster at midnight and that sort of thing, all that sort of stuff.
Or they're just worried, Graham. They're just worried, and they can't sleep. That could also be a reason. Interesting, isn't it? I mean, you can almost envisage a time where you'll sort of work out at home. I bet you could do this now. Probably, you probably get a pop-up screen at home, and all of a sudden you've got like you've got your gym membership, and there's 20 people. I bet that's already happening, isn't it?
It's already happening, but it's hard to have an Olympic lift platform and a Smith machine and plate-loaded weights equipment at home.
Yeah.
Or a treadmill or stuff like that. So the kit you need, it's hard to replicate at home.
Yeah,
but the actual exercises and the kettlebell you can do. That's what we're seeing happen.
Yeah, interesting. Okay, Dale, you were going to ask about Debenhams, but I think we've covered that, haven't we?
Yeah, really. Yeah, I think we covered it, but the point was that the demise of the high street retailers seems to be giving you guys an opportunity to expand. But as we said, you're going into those.
Right, Duncan, I got a question, Duncan. From a property point of view, why are you renting and not buying your sites and then doing sale and leasebacks? Because it would probably be better. You'd probably make a few quid along the way, wouldn't you?
I don't know. I mean, a business that's expanding at the rate that we're expanding at, I think, there's certainly not the availability of freehold property. Most of the buildings that we go into are multiple occupation or retail parks, shopping centres.
Okay.
At least in multiple occupation. So I would say probably 85-90% of our properties we wouldn't even have the opportunity to buy them. And secondly, a business that's expanding at the rate that we're expanding at, really we should be committing every ounce of spare capital that we have to fitting the gyms out and moving on to the next one, not getting involved in lengthy freehold sales and then leasebacks and tying up capital unnecessarily. So
I've got can I ask a financial question of you guys?
Yeah.
So because I just thought this might be interesting for people listening. So often when the pub operators would take a long lease, they'd take a 25-year lease in order to write down the fit-out cost over 25 years. And if they'd invested, I don't know, £500,000 into the fit-out, they'd put that down on the balance sheet as an asset. It was interesting, I thought, Duncan, what you said earlier, that you're taking, say, 10-year leases. So you're not writing down over such a long period. So that must have an impact upon your profit, but actually it's probably, I mean, in old fashioned, you spend £1, comes off your cost of occupation. It costs you £2 to be there, and you're bringing in £3, you make £1 profit. Whereas obviously clever accounting writes some of that £2 over 20 years. So you're actually doing this on a shorter lease length. How does that affect you from a business point of view? I mean, is that where I was surprised that you said that actually.
Also, let me pick up on the financials on that. What we do is we write off different elements of the investment over different time periods. So the gym equipment, which is about a quarter of the investment, we put about 1.25 million into any given site, equipment and leasehold improvement. The equipment we write up between 5 and 9 years, typically depending on the equipment, and the leasehold improvements we write off at between 10 and 15 years, depending on the lease break period, typically. And that's the way we do it. We think that's a sensible and prudent way to do it.
Yeah.
Remember that our assets absolutely get exhausted, because when you got 5,000 or 6,000 members in a gym, in a big gym, we're doing 200, 300,000 visits a year. They take a hell of a beating. So you've got to write the assets off. You've got to upgrade the facilities, so they do get exhausted. So you have to depreciate it and replace HVAC and boilers in 10 or 12 years or whatever. So it's right we write them off over that time period.
And so what's the average cost of being a member of your gyms? So there's no monthly cost, is that right? Or
there's monthly cost. There's no contracts, so you're not bound in for 12 months at a time. And the average cost is about $19.50 a month across the country. And it varies from about £12 to the most expensive ones. There's one outside in central London that's different from this, but
that's cheap,
so
isn't
about
it?
35.
God, that is cheap. And then what do? If you wanted to use, do you pay for a class? Is it a pay-as-you-go model? Do you pay for classes?
50 to 80 classes included for free.
Sorry, how many classes did you say?
50 to 80 a week.
So there's no add-ons?
You can pay for multi-gym membership. So you can pay to use more than one. You pay an extra £2 a month to use more gyms than one at home, at work. And you can buy little premium add-ons as well. But yeah, it's a simple, straightforward offer for people. And that's why we've got lots of members and they go regularly. And when they don't want to go anymore, they leave and other people join.
So the old-fashioned gyms are people like what, Virgin, Active, Fitness First. So they must, you must have a massive impact upon them. I mean, I would say, because their costs, they were never at those sort of levels, were they? They were sort of 70, 80 quid a month or something.
The mid-market is typically defined as 40 to 50 pounds a month and a 12-month contract. That's where the market was. And we, roughly speaking, halved the cost people, the price, and we said you don't have to have a contract. And of course, yeah, that means that people can make a £20 or a £19 decision to join us, and they were having to make a £400 or £500 decision to join the other operators because you're signing up for a 12-month contract. And there are lots more people who spend £19, £20 and will spend £400 or £500, and that's why we've grown the market by 30% over the last 6 years.
So what's interesting is when I was earlier talking about the my view of online estate agents, and they were cutting the cost, and the question was whether they were delivering the product. What you guys are doing is you're cutting the cost, but you're also delivering a completely flexible, modern product.
Exactly. I mean, what we don't do is we don't give you a swimming pool, we don't give you a sauna, we don't give you a Turkish bath, we don't give you a slightly grotty cafe, and that sort of stuff. We give you a great gym, good changing rooms, good showers. We ask you to bring your and into the gym, work out, and get out again. That's what
yeah. Shame about the swimming pools, though. I like a nice swimming pool.
Yeah, I know, Neil. I know you like your swimming, but bad luck. You'll have to go somewhere else, mate.
So I can't get it for £19.50 a month. What a shame. Never mind. Well, maybe there's a market there. So I take it simply because you get more people in a gym than you get in a pool.
Absolutely right. And a bit of gym space costs an awful lot less than a pool, and keeping a pool hot and all the chlorine and all the messing around, and costs you about £100,000 a year to run a swimming pool in a gym, a decent sized swimming pool.
Really?
Yeah.
Okay, good. All right. Well, I think that's really interesting, guys. Anything else you think property wise that you want to mention to us, to our people?
I don't think so. I mean, Duncan, to you, I think, on that.
I mean, just let's anybody who's got any opportunities that they think may be suitable, of a suitable size, then do feel free to get in touch with our property team. We can process opportunities pretty quickly. We can give people a view almost immediately as to whether the location and the size of property are of interest, and some indicative rental terms pretty quickly as well. So always consider us. In terms of the investment, even since I've been with the business, which is just over 2 years, I've seen the yields from pure gym investment sales come down from 8-9% to down to 5.5%. Yeah. It's been incredible, the speed at which they've come in. I see no reason why that won't continue in the current market. When you look at our business and you look at the revenue and the profits that we're making, our covenant is only getting stronger.
Yeah. Well, the investment market is actually very it's lacking stock, and I suspect that's part of the reason why people are jumping when they can. Okay, well, that's, I think, everything about Pure Gym. I just wanted to tell some other news to the audience, which I thought people might find interesting. So, as you know, we have a an interest in another business called Click to Purchase, where people buy properties online. And of course, we think that's the future. And we've done something like £200 million of sales online, where people can click a button and buy a building. What was interesting is yesterday, another agency, actually not an agency, rather, actually a residential development trading company up in Manchester, was the first to sell a residential property online using Click to Purchase in the UK. And that transaction would have immediately been recorded in a blockchain ledger. And that was undertaken by a company called HS Property Group. We're really thrusting young group of guys who I've met quite recently. So I've been really impressed with them. But what's interesting is how it shows that the online model is now moving into the residential sector. It's been trading in that way in Ireland, but the residential agents in the UK have been a bit slow to come to the table. But I now think they're all going to be coming one after another, because it's the way forward. And the government have been promoting a way of trying to speed up the house buying process. And my view is that technology is the answer. But I won't go into that too much now. I'll say that for another time. But I just thought it was very interesting. First residential property concluded online. So guys, I would say that's probably about it for today. Unless anyone's got anything else to add. Graham, Dale?
No.
Okay, guys. Well, look, if I can just finish off. Duncan, thank you very much for your time. Like I said, if we do get any inquiries, we'll refer them straight on to you.
Lovely. Thank you
very much for your time. Humphrey?
Always a pleasure.
Always a pleasure. No doubt the bike is in the office, ready for the ride home, I'm sure. Graham, thanks very much.
I'll be on the train.
Okay. Dale, thanks very much.
Thank you.
Okay, so for me, remember.
Cheers, guys.
Just remember, call us your CPD certificate, MIPIM, podcasts, Pure Gym, £19.50 a month. Okay. Thanks very much. Okay, bye.
Bye.
Thank you. Bye-bye.